Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. In this video, we are going to cover CA Final IDT RTP May 2025. Right? Let us get into the video. So, first, there is a case scenario. There are two case scenarios, and our strategy is first go with the questions in case scenario, not with the case scenario. So, let us go with the MCQs first, so that we'll understand what are the requirements from the case scenario. In relation to goods In relation to goods sold from its warehouse in Kandla, Gujarat, the company shall be liable to pay customs duty and IGST applicable, will be liable to pay customs duty, only be liable to pay IGST, not liable to pay any tax. Okay, fine. So something they sold something from their warehouse, whether GST will come into picture or not, we have to see. In relation to advance ruling order received by the company in Rajasthan, the order is binding on the company only in Rajasthan but on jurisdictional officer across all registrations of the company in India. The order is binding on the company across all states in India. The order is binding on the company and jurisdictional officer in Rajasthan. The order is binding on the company and jurisdictional officers across all registrations of the company in India. See, when you take any advance ruling in any state, that advance ruling will be applicable only for the respective state, and it is binding only on the company in that state, its branch, and the jurisdictional officers of that particular state, not across India. So option C will be the answer here. Without reading case study, we are done with this question C. In case company prefers an appeal before appellate authority against the order passed by adjudicating authority in Maharashtra, the amount of pre-deposit to be made is 11 lakh, 13.5 lakh, 10 lakh, and nilla. Please understand, when you are going for an appeal, sir, when you are going for an appeal with appellate authority, then later on you are going with appellate tribunal. Sir, when you are going for an appeal, here the very important point is, sir, you should make a pre-deposit of 10% of tax, not interest, not penalty, nothing. Only tax amount, whatever is involved in the dispute, on that 10% you should make a pre-deposit. Here, if it is appellate tribunal, then it is 20% of tax. That is very, very, very important. And sir, this is maximum. This, there is a cap here. This is maximum 50 crores. That is 25 plus 25, and this is 100 crore, 50 plus 50. Okay, this is the maximum. This is maximum limit, but this is the amount which you should deposit, or this one, whichever is less, you have to deposit. Okay, so please keep this in mind. Next, in case where tax has been wrongly collected by the company from the recipients, company shall pay such amount to the government, company shall refund back to the recipient, company shall deposit such amount with consumer welfare fund, company can retain such amount with itself. If you remember section 76 or 77, I am not able to recollect section number, but still, sir, whatever you have collected in the name of tax, you should pay that to the government. Okay, so company shall pay such amount straight away to the government. Okay, so that is what the answer. So without reading again question, we are able to, without reading case scenario, we are able to solve this second MCQ here. Next, in case of special audit being conducted in state of Madhya Pradesh, remuneration of CA is payable by the company. No, sir. Remuneration of CA in case of special audit is payable by the commissioner, determined by the commissioner. Remuneration of CA is payable by the company, directed by commissioner. No, remuneration of CA is payable by the commissioner, but expenses of the audit shall be no. Everything will be paid by the commissioner only. So option D will be the left out option. That will be correct. Expenses of examination and audit of records, including the remuneration, shall be paid by the commissioner. So that is the answer. So 5 MCQs in this case study. We solved 3 MCQs without reading the question itself. Now, sir, if you see case scenario 1, Vardhaman Limited, hereinafter referred as company, registered in Delhi. Okay, Delhi has operations in multiple states across India. Company has taken separate GST registration in all the states where it operates. Okay, during the month of January, the tax team presented following information in its report of the management. Okay, fine. Let us see that. Sir, what are those? First one. The company sold goods valuing 5 crores from its warehouse located at Kandla Port, Gujarat, to a buyer located in Ahmedabad by way of transfer of document of title. Next, the responsibility of clearance of such goods shall be on the buyer. Okay, the goods were imported by the company from Vietnam and not cleared for the home consumption since then. That means this is nothing but, sir, goods are sold from the warehouse even before clearance of the home consumption by way of transfer of document of title. So this is not at all a supply as per schedule 3. So there is no liability to pay GST. If you remember, first question, first MCQ is based on that. So, sir, if you see the first MCQ, if you look at the first MCQ, sir, what is the answer? The answer is not be liable to pay tax, any tax or duty. That will be the answer. Option D. Okay, fine. See, 5 points are there, 5 MCQs. That means each point will give you answer regarding one MCQ. First MCQ done. This is second MCQ already regarding advance ruling. We have finished it off. Next, third point regarding that appeal, correct? The pre-deposit amount. The company received order from adjudicating authority in Maharashtra for a demand of tax 1 crore. And you need not worry about penalty 10 lakhs and interest 25 lakhs, correct? As I told you, sir, we should go with tax amount. Okay. Was confirmed by the adjudicating authority. The dispute in this case was similar to issue which was a favorable order got from advanced ruling authority in the state of Rajasthan. So, as discussed in para 2 above, the company feels that it has a strong case in the matter before appellate authority. So, when you are going to appellate authority, how much you should deposit? 10% of the tax, correct? So, what is 10% of tax here? So, tax amount is 1 crore. So, 10% of tax is 10 lakhs. So, that is the answer. Remaining all MCQs we have finished. So, there is no need to read these questions at all. Okay, these particular points at all. So, without reading entire full paragraph or full case study, we have finished that case scenario 1. Now, let us move on to case scenario number 2. So, case scenario number 2, if you see, as you know, like let us first go with the questions actually. The MCQ questions. Sir, the value of taxable supply on which GST is payable by Delhi head office. Value of taxable supply by Delhi head office. That means you should know Delhi head office sales. Okay, under FCM. Delhi head office sales under FCM we should check. Next, value of taxable inward supplies on which GST shall be payable under reverse charge by Bihar power plant. So, Bihar's RCM purchases. Bihar RCM purchases we should be knowing. Next, value of supply on which TDS under section 51 shall be deducted by Delhi head office. So, Delhi head office TDS. Delhi TDS. Okay, fine. Next, here value of inward supplies, taxable inward supplies on which GST is payable under reverse charge by Delhi head office and Odisha plant. We have seen Delhi, Bihar, Odisha till now. Okay, so here I can say Delhi RCM purchases and Odisha RCM purchases. We have to see. Okay, fine. Next, which of the following statement is most appropriate with respect to sale of metal scrap? That we'll understand only when we see the question actually. Okay, no problem. Next, so the following statements, let us see. Sir, GST on value of scrap 45,000 metal scrap payable by. So, Chhattisgarh plant metal scrap we have to see. Sir, Chhattisgarh plant metal scrap sale we have to check. Okay, in the question. Fine. Next, which of the following are not taxable under RCM? Which is the most appropriate option? So, we should see. We should have a track of RCM transactions actually in the question. Next, this is altogether a different question. Now, let us go to the case study. Sir, if you go to the case study, in this the case study, if you see, Vidyut Corporation Limited is a public sector undertaking, is a PSU engaged in business of generation of electricity from conventional as well as non-conventional sources. Okay, Government of India is holding 75% equity in the said company. Balance equity is held by institutional and domestic investors. Okay, company has taken separate registration under GST in each state where and all it is having the operations. The company is having its operations is head office Delhi, as we have already understood in the question. Sir, head office is Delhi. Okay, now sir, they are also having their power plants in the states Bihar, Odisha and Chhattisgarh. So there are 4 places here: Delhi head office, Bihar, Odisha and Chhattisgarh. We have understood that from the question. Following transactions carried out by the company during the month of Feb. So here, sir, they have given sales information. This is regarding sales information. Okay. Let us see one by one: sales, taxable, forward charger, reverse charger, exempt, all that stuff. So now sale of electrical energy, sir, it is exempt under GST. So for all these things, no GST. So no GST. Fine. Bank interest and it is exempt under GST. Exempt. So no GST again. House rent recovered from the employees. That means by giving the residential accommodation to the employees. Sir, residential accommodation obviously exempt under GST. Hence no GST again. So all these things doesn't matter. Okay. Next. Rent collected from banks, ATM, post office, shops located in office premises. Please understand, rent collected from banks, post office, all these office premises. Now, this is commercial building. Commercial building, if you remember entry 5AB, so renting the commercial building by unregistered. So supplier is unregistered, recipient is registered na RCM. Here supplier is registered in all the locations. So RCM will not come. Sir, this is a sale. I can say this is FCM sale. Okay, this is FCM sale. Next, sale of metal scrap under chapter 72, excluding TCS 1%, to Birla scrappers unregistered under GST. Purchases of metal scrap from unregistered person RCM, but sir, sale of metal scrap to unregistered person, it is not given in RCM, so it is FCM only. So I can say this is FCM sale happily. So this is again FCM sale. Okay, fine. With this we are done with this. Next, additional information. Transactions carried out by the people for Feb month. Sir, a supplied order, a supply order, sorry, a supply order for stationery items awarded by Delhi head office to Messrs Stationery Mart, New Delhi, 3,36,000, including GST in January. The vendor supplied stationery items worth 44,800, including GST 12%. Issued tax invoice in the month of February. Delhi head office has made the payment of the said bill in Feb by creating the vendor's account for that amount on the same date. The remaining amount will be paid in April. So now if you understand, there is a question regarding TDS concept actually, and for this, because this is a PSU, for them any contract which is like exceeding single contract value exceeding 2,50,000, TDS will come into picture. So here it is 3,36,000. If you see excluding GST, 3 lakhs will be the value. So contract value exceeding 2,50,000 on whatever the payment is there, excluding tax. Excluding tax, it will be 40,000, because they said 12% is GST rate. 40,000 into 12%, 4,800. So 40,000 will be the value of supply. On 40,000, TDS will come into picture. Okay, so TDS at 2%. Now there is an MCQ here regarding TDS. If you remember, I have written here Delhi TDS like that, 8th one. So the value of supply on which TDS under section 51 shall be deducted by Delhi head office is 40,000. So one MCQ is over. Okay. Next, Odisha plant purchased office furniture 2,80,000. Sir, here this is purchase, TDS, FCM purchase. Okay, so nothing to worry. This is one transaction. Next, this Odisha plant purchased office furniture 2,80,000 during Feb from unregistered dealer. If you are purchasing from unregistered fellow, obviously he would have not charged GST from you. So here, no GST on this, no GST implication, nothing. Next, sir, a board meeting raising term loan for project expansion was held in February. Delhi head office paid 20,000 each as sitting fees to 4 independent directors. You know, sir, sitting fees paid to directors is coming under RCM. So 80,000 director remuneration RCM purchase. This is RCM purchase. Okay, hope you are clear with this. And further, it paid 80,000 to one of these directors, and understand all the directors are registered under GST. That is very important point here. Why? Because sir, further, it paid 80,000 to one of these directors who rented the office building to Delhi head office. Sir, one director rented office building to Delhi head office because the supplier is registered. It is a commercial property. Supplier is registered. RCM will not come into picture. So, director renting the building, renting the commercial building for the company is subjected to FCM only. So, this 80,000 purchase is again FCM purchase. Okay, fine. Next. Sir, for safety and security at its head office power plants, the company engaged private security as well as CISF. That means government is providing security. Okay. Sir, CISF, Delhi head office is not making any consideration, but Bihar plant is paying 10 lakh, 8 lakh and 14 lakhs they have paid to CISF. And if you understand, this is services received from government which are taxable and taxable under RCM. So this is RCM purchase. Okay. ABS Security Services also provided a private security agency. RCM will come here only when the supplier is any person other than body corporate. But here this is a private limited company which is a body corporate. So RCM will not come into picture. Sir, this is FCM purchase. Okay, fine. Next. Bihar plant purchased a machinery in Feb from Sahu Enterprises, Patna, not registered under GST for 86,000. Full payment was made in Feb. Rate of GST of the said machinery is 18%. Because again this is purchased from unregistered person, sir, there is no GST here, no GST implication, nothing. Okay, fine. So the information we have decoded fully. All the amounts mentioned above are excluding GST wherever applicable unless otherwise specified. Okay. Based on the facts, answer the following questions. Okay, let us answer the following questions. Sir, you want one information regarding, we have already written here. Sir, we want information regarding Delhi sales FCM. Okay, what are the sales made by Delhi FCM? Because we want to know value of taxable supply, not GST payable, all that stuff. Okay, sir. So, value of taxable supplies made by Delhi head office. Sir, sales here also nothing, here also nothing. This is also exempt. This is one sale, sir, 48,000. And this is one more FCM sale. Here also nothing, sir, from Delhi head office. But there is other income, sir, 2,50,000. That is another sale. So 2,50,000 plus 48, sir, 2,98,000. Because all these below things are nothing but purchases. If you remember, the below information here given is nothing but purchases. No sales are there. So 2,98,000 is the answer. Okay, we have understood this. Next, value of taxable inward supplies on which GST shall be payable under reverse charge by Bihar power plant. So we should go with the purchases. We should decode the purchases of Bihar and on which tax is payable under reverse charge. Okay. Now, sir, all this first information is sales information. Now we are moving into purchase information, additional information. Here the purchase TDS FCM, that is of New Delhi. We want Bihar. Here no GST, we have understood that. Here Delhi head office purchases, director remuneration, all that. For that is Delhi. So Bihar, if you see, sir, Bihar only, this is under RCM purchase, sir. This is RCM 10 lakhs. Nothing else here, no GST itself. Okay. So the answer is 10 lakhs. Bihar, whatever the purchase on which GST is payable under RCM is 10 lakhs. Hope you are able to understand. We have, see, first of all, we have understood the question. First, we went through the questions. We have understood what information we need. And then later on, we went to the case study. We studied the case study. While studying the case study itself, we have decoded the information and properly written there, which is sale, which is purchase, which is RCM, which is FCM. So this is becoming easy for us. The value of supply on which TDS. Oh, this also we have already answered. So we are done with that. Next, ninth one. Sir, value of taxable inward supply on which GST shall be payable under reverse charge. So for this, as I told you, we need Delhi RCM purchases and Odisha RCM purchases. Here, if you see, one interesting thing is all the figures given for Delhi, all the figures given for Odisha are different. If you do either for Delhi calculation or Odisha calculation and you get any one answer, obviously you need not do for the other thing. So now, for example, I'll just show you. Sir, Delhi RCM purchases, let me just check. Sir, Delhi RCM purchases. This is one purchase by Delhi, but it is not RCM. Here, director remuneration 80,000 is there for Delhi. Next, here nothing is there under RCM. And this is FCM purchase. So this is not required for us. Nothing else is there. So Delhi RCM purchase, sir, only director remuneration 80,000 is there. That means in any option, if there is 80,000, that will be the answer. Simple. Sir, if you see in this all answers, only 80,000 in Delhi is given only for one thing. So obviously B will be the answer. You need not calculate for Odisha straight away. You can save some time. Next, which of the following statement is most appropriate with respect to sale of metal scrap by Chhattisgarh? Chhattisgarh metal scrap sale. We have seen that metal scrap sale, correct? Here what is happening, sir? Metal scrap sale is done by Chhattisgarh. So as I told you, this is a sale covered under forward charge mechanism. Okay, let us see the question. They said GST is payable under reverse charge, first option. So no, it is wrong. GST payable under forward charge. Okay, correct. But the problem is that GST is payable on 45,000, not TCS is not included, correct, in value of supply. Sir, value of supply excludes GST, excludes TCS under income tax. So this will be the answer, not this one. Okay, because TCS will not be included in value of supply. Next, sir, which is the most appropriate option here? The question is, what are the following supplies which are not taxable under reverse charge mechanism? They spoke about house rent, they spoke about rent collected from bank, they spoke about sale of metal scrap. which is an RCM, which is not an RCM transaction. 1 and 2 not an RCM transaction, 1, 2, 3 not an RCM transaction, 1 and 3 or 2 and 3. Sir, if you see here, all these are nothing but sales made by these people, correct, or this company. And all the sales, whatever they made, house rent is also exempt there. No RCM. This one, no RCM. This metal scrap, no RCM. So all the three are not RCM transactions. So option will be 1, 2 and 3 like that, where it is given B. This is the answer. Okay, that is the next one. So with this we are done with case scenario number 2 as well. So if you see the next small MCQ kind of thing, sir, Lumber industry India, the name itself is little funny. Okay, imported an article gamma in large quantities from Malaysia, a developing country, to meet the increased domestic demand of its final product. The central government concerned about the increased imports of the said product and is considering imposition of safeguard measures. So regarding customs duty, after considering the inquiry, it is satisfied that imports are threatening to cause serious injury to the domestic industry. Very good. The share of imports of article gamma from Malaysia continues 4% of the total imports of that article into India. Okay, fine. So which of the following statements are correct? That is very important, sir. Given 4 statements, which is correct? That is what we have to select. Choose the most appropriate option. Okay, fine. Let us choose that. Now, central government is empowered to impose safeguard duty maximum period of 10 years from the date of its imposition. Yes, absolutely correct. Safeguard measures can be imposed since the share of imports from of article gamma from Malaysia exceeds 3% of the total imports of that is also absolutely correct. Central government is empowered to impose safeguard duty maximum 4 years from its date of imposition with no further extension. Absolutely wrong. Next, safeguard measures cannot be imposed since the hey, this is also absolutely wrong. Sir, you can impose. So if you see 1 and 2 are correct, so this is the correct answer. So for question number 12, option A is the answer. Okay, so with this we are done with this MCQ parts. Okay, now let us move on to this question number 13. Actually, question number 13 separately have an uploaded video. In this also I'm attaching, don't worry. Separately I have uploaded a video how to solve 14-mark question in main exam. So in this particular 13th question, I will be discussing how to approach even the question, first question, 14-mark question, how to present all the stuff, that and all will be clearly discussed. So continue watching that. So if you see in the first question, see when the question is all about asking you to calculate net minimum GST payable in cash. For solving this, you have 3 steps. Simple. The first step is all about calculating the gross GST payable. So for calculating the gross GST payable, what we should do? They have given sales information in the question. Decode complete the sales information, automatically you will get gross GST payable. Next, second step is calculation of ITC available. For getting ITC available, sir, you should decode all the purchases which are given in the information, which are given in the question. So then we'll get ITC available. And final step, set off them. Now please understand, sir, for going through these steps, what are fundamental things which we should need? Sir, we should know what is sale, what is purchase first. And when you know what is sale, what is purchase, you should know which is intrastate, which is interstate. And you should know which is taxable, which is exempt. And you should know which is blocked credit, which is not blocked credit, which is FCM, which is RCM. Like this, you should have decoded properly the sales information and purchases information. Then it is easy for you to solve the question. Okay, so while reading the question itself, we should segregate all this information. We should gather all this information. So let us assume, like I'll teach you with an example here. So as I told, RTP May 2025 question here, sir, we are going to see in this particular video. So first, while reading the question, first thing what we should identify is, see here they give Purva Impex Limited. Sir, we should understand who is this fellow. Sir, Purva Impex Limited is a company. Why we should identify who is the taxpayer? Na? You know, in RCM and exemptions, sir, certain cases based on body corporate, non-body corporate, partnership firm, all these things, the provisions will change. The taxability exemptions provisions or RCM, FCM provisions will change. So you should be clear first in identifying who is the taxpayer here. Sir, the taxpayer is a company. Okay, we have understood that. Second important thing, sir, the second important thing what we have to identify is, one second. The second important thing what we have to identify is in which state he is registered. Sir, in the given question, he is registered in Maharashtra. Okay, the registered state is Maharashtra, because we should understand what is intrastate, what is interstate, all the stuff. So here it is Maharashtra, fine. Now, it is not engaged in agricultural operations, super. Purva Impex Limited India is a subsidiary of Purva Incorporation, an entity incorporated in USA. Sir, please understand, when you read this word, subsidiary of Purva Inc., an entity incorporated in USA, here one thing should come in your mind. These two are, of course, holding and subsidiary company. These two are different entities as a whole. So they are not distinct persons. They are not distinct persons. Anything happening between them will be called as export, if you remember the export definition. Okay, so they are not mere establishments of distinct persons as per section 8. Okay, hope you remember that. Next. So that is fine. Which is engaged in providing information technology services to customers in India. Okay, it provides the following information for the month of April. Another important aspect is we should identify the tax period, because some information in the question, suppose the question here is with respect to April, some information in the question may be related to March, may be related to August, something like that. Okay, May, something like that. So you should understand which information belonging to April, that information we should decode, what and all the information where the tax implications will fall in April, that only we have to consider. Other information we have to straight away ignore. Okay, now let us move on to the information. See, first of all, some questions they will not give you the difference of outward supply and inward supply. In this question they gave you completely what are outward supplies, what are inward supplies. They have segregated, they made your job little bit easy. Some questions they will just mix some two sales, one purchase, again sale, again purchase, like that. They will shuffle the transactions. So there you should be very careful. There are very good chances. One good mistake what you do is you will misunderstand sale as purchase, purchase as sale. Okay, then your ITC becomes output tax become will become your ITC. So please be careful there. Okay, sir, here they have given outward supplies details straight away. What is the first outward supply? They have undertook promotion and marketing of information technology services on principal to principal basis in India for Purva Incorporation. Purva Incorporation is nothing but my holding company which is abroad. For them, I am providing promotion and marketing services. That means, can I say this is export? Okay, sir, I have understood this is export. So generally IGST should come. Let us see what is there in the information below also. Okay, so this is export first of all. Next, sir, supplying printed letter cards to Shubhashini Enterprises registered in Maharashtra. That means again this is intrastate sale, correct? Intrastate sale. Okay, fine. Logo depicting the vision of the firm was to be imprinted on each letter card, and said logo was provided by the firm. Material cost is 8 lakhs, printing cost is 72,000. Here one thing we have to understand, that this is supply of good or supply of service. If you remember the clarification on this printing services, here we are selling letter cards and incidentally we are printing the content, printing the logo. So here the predominant element is selling the letter card and incidental one is printing the logo. So here this is supply of goods. SOG means supply of goods, selling the letter cards. That is the service supply happening here. So this is supply of goods, not supply of services. 8,72,000. So here there will be CGST and SGST. CGST and SGST. Prima facie information based on that. Next, supplied raw cotton to Dhrutara traders registered in Maharashtra. The raw cotton was purchased from the local farmers during the previous month. We need the information related to current month. In current month, you are making a sale of raw cotton. Now, the moment you see the word raw cotton, automatically will jump to like, sir, RCM. Please understand, when RCM will come into picture, when you are buying from an agriculturist, a registered person buying from agriculturist. Here, sir, Purva, what is this? Purva Limited of Purva Impex Limited is a company selling raw cotton. RCM will not come into picture here. So please understand, sir, that might be one mistake here. So this is one nice point which we should be careful. Okay, so again here it is intrastate sale, supply of goods. And sir, this is FCM only, sir. This is also FCM only. And here also if something comes, FCM only will be coming into picture. Okay, next. I am writing down all these things because next when I start the answer, for me the information will be properly ready so that I can just pick up the information and drop it. Okay, so that is why I am doing all these things. Next, supplied maintenance services to Municipal Corporation of Greater Mumbai, which has awarded a contract of maintenance of streetlights in Greater Mumbai municipal area. Maintenance work involved the replacement of defunct lights and other spares. Out of the total value of 1,20,000, value of defunct lights and other spares replaced is 32,000. If you remember exemptions, actually, any services provided to this local authority under Article 243W, 243G, whatever their duties, Sir, 75-25, if you remember, 75% can be the services and 25% or less than 25% you can provide goods. Then it is exempt under GST. So here if you see in 1,20,000, sir, 32,000 worth goods they are supplying, which is more than 25%. Sir, out of 1,25,000, if you see 25% can be goods, sir. 25% is nothing but 30,000. So here it is 1,20,000 goods worth is 32,000 they have used. So it is taxable. Exemption you cannot enjoy. So here this is also regarding Greater Mumbai municipal area. So Maharashtra only. Anywhere given Maharashtra? Still not given also. Mumbai, Maharashtra, you should understand. So this is again intrastate sale, supply of goods, supply of services. This is CGST plus SGST will come into picture. Okay. Next, giving on hire 10 cars, seating capacity of 5 persons including driver to Gujarat State Road Transport Corporation. If you remember exemptions are renting the motor vehicles with a seating capacity greater than 12 for state road transport undertaking is exempt, but here it is only 5 persons including driver. So this is also taxable. This is related to Gujarat. You are in Maharashtra. So this is interstate supply of service, renting the vehicles. So IGST will come into picture. Okay, we have decoded the complete information with respect to sales. Okay, now maybe some additional information may be there below also, we don't know. So now let us move on to the next one. Inward supplies they are given. So inward supplies, I repeat, whatever the information we have got in the question, if you are decoding it properly, understanding, if you see here whether it is intrastate, interstate, taxable, exempt, RCM, FCM, everything when we are decoding automatically. And important thing is in your exam have the pencil with you, and on the question paper please make sure you are writing this information so that once the solution is over you erase this information, nothing wrong. Okay, so when you got this information with you, automatically when you are solving the problem it will be very easy for you. Next, purchases, we are talking about inward supplies now. So let us move on to inward supplies. Purchased processing machines from Bobby and Co. registered under GST in the state of Gujarat. Machines were brought in as is varies condition at Gujarat to produce taxable items. This adjustment is really very important for you, where you will neglect it. If you want, you just pause the video for a while and just understand what can be the tax treatment for this. Just pause the video for a while and just think about this. Sir, you have purchased machinery. You are in Maharashtra. You purchased this machinery from Gujarat, and machinery is also going to stay in Gujarat. So movement of goods not involved. Now place of supply is also Gujarat. Supplier is in Gujarat. Place of supply is in Gujarat. He will charge CGST plus Gujarat state GST because you are registered in Maharashtra. Can you take it as ITC? Not possible, sir. Technically, it is not possible because that fellow will charge CGST plus Gujarat state GST, and I am located where? I am located in Maharashtra. I cannot take CGST plus Gujarat GST as ITC. Are you understanding the point? That is going to be very crucial here. So, how many of you thought about this? Okay, fine. Let us continue. Let us continue. Now, second one, sir, purchased metal scrap from Mansukh traders of Maharashtra, an unregistered person to be used in the manufacturing process, 2 lakhs. So please understand, we know that purchase of metal scrap, the latest hot topic. Okay, so which is there in amendments also, all that. So purchasing metal scrap from unregistered person, RCM, and here this is intrastate supply of goods, RCM. That is important actually. Next, if you see, procured information technology services for its business through electronic mode from Thomas Inc., a company located in Germany. This is again importation of services. For importation of services, RCM again will come into picture. Import, supply of service. So it is RCM. Okay, we have to pay tax under RCM. Again, sir, this is another interesting adjustment. Please be careful here. Sir, what is this? A machinery to be used for manufacturing was sent to George Incorporation USA for carrying out repair work on the same. The consideration to George Inc. was paid for such repair work. Machine was received after repair in the month of May. Please understand here. Sir, machinery, which is our machinery which we use in manufacturing process, we are sending it for repair to USA. There the repair is getting done, and again we are getting the machinery back to India. So what is the tax implication on this? Again, pause the video and think for a while. After thinking and getting your answer, then continue the video, please. Please pause the video and think about this. Yes, here now please understand, the supplier is from USA and you sent the machinery to USA. What is the place of supply as per section 13 subsection 3, where the goods are to be physically present for providing the repair, where the services are actually performed. Sir, services are actually performed in USA. Location of supplier is also in USA. Place of supply is also in USA. How can you make that taxable in India? Are you understanding the point? So here actually no GST. That is one another interesting part. Okay, so hope you are clear with this. So we have decoded complete sales information, purchases information, whatever they have given, and let us go with the additional information. Sir, what is this additional information? Purva Inc. USA provided corporate guarantee to of 1.5 crore on behalf of Purva Impex Limited to Money Bank Maharashtra free of cost. Corporate guarantee provided to Purva Impex Limited. We are talking about Purva Impex Limited. That means, can I say Purva Impex Limited has received corporate guarantee services? And if you remember, sir, corporate guarantee given by directors, there is no open market value, that is nil. But here, corporate guarantee given by another corporate entity, obviously. Sir, in such case, if you remember, what is the value of supply? 1% of the guarantee given or actual consideration, whichever is higher. Here, consideration itself is not there, free, 0. We'll compare it with 1% of 1.5 crores. 1% of 1.5 crores. Can I say 1,50,000? And this is purchase, importation of service. Correct? Importation of service. So can I say this is RCM transaction? Okay. On this, GST should be paid by Purva Impex Limited of India. Hope you are clear with this. So additional information, we got one additional purchase. Next, they have given rates. I don't think any other information is relevant here. Okay, rates, let us proceed. Rates I have simplified here for you. They are talking that supply of all services, GST rate is 18%, all goods 12%, but cotton 5%, scrap 18%. These are the rates. So accordingly, you solve the problem. That is what they are saying. This you should be really careful when you are going through this in the exam, because sometimes you will get confused or you will miss some information. You will miss reading something, so that the problem will be wrong. So please be careful here with the rates. All the amounts given above are exclusive of taxes wherever applicable. No opening balance, super. All exports made by Purva Impex Limited are through furnishing LUT without payment of IGST. Because of this, what is the impact? Sir, we have only one export in the question. So this one. So here can I say no GST? No. No GST implication, because without payment of tax under LUT. Next. From the information given above, you are required to compute the minimum net GST liability payable in cash. Okay, fine. So this is the question. Let us go with the solution. We have completely read the question and we have did the decoding. So for the month of April, you should calculate the minimum GST payable in cash. So let us start decoding the information and start doing the solution. So as I said, there are 3 steps in solving this question. First step is, see, to save your time in the video, I have just made some tables, formats, everything ready, so that quickly we can just finish the video so that your time will be saved. So first step is nothing but calculation of gross GST payable. See, gross GST payable or ITC, the format is same. First, remember this format. Particulars, amount, IGST, CGST, SGST. One important thing is with respect to this IGST. In all the suggested answers, you will be seeing first CGST, SGST, IGST, but you follow the format IGST, CGST, SGST, because you know, to set off the GST, so to set off the ITC, first agenda is to make IGST, ITC balance nil. So to keeping that in mind, if you go with this way, like, it will be very comfortable for you. So now coming to the point, sir, particulars, amount, first step is nothing but calculation of gross GST payable, amount, IGST, CGST, SGST. First of all, if you remember, see, how to present the answer is what very important. We have decoded all the information. So sales, if you see, sir, how many points are there here for sales? For sales here, there are 5 points. I am not writing each and every point here, so that let us not waste time. Let us understand how it should be proceeded. That's all. So 5 points are there. First point is regarding promotion, marketing, export, correct? So first, what I will do, first in particular, I will write promoting and promotion and marketing to Purva Incorporation of USA. Sir, this is export of service under LUT, hence no GST liability. All conditions of export of services are satisfied. Please understand the explanation, sir. This is particular export, and regarding that, what is the tax treatment, whether it is exempt, taxable, whatever it is, whatever you have your explanation, don't take it to working notes. Don't go after the problem is over writing all these reasonings. Please finish the reasoning in the answer, main answer itself. Below the particulars, finish it off. Simple. Below the particulars, I repeat, under the particulars itself one entry, and below that what are the reasons, all that you write. And here the amount column 20 lakhs, and you know export without LUT, sorry, with LUT, so without payment of tax, I have entered nil nil nil. Enough. Second entry, if you see, I have written only two things for you to please make you to understand all that, so don't worry. So second one, supply of letter cards. Enough, simple. Sir, this is predominant activity, supply of goods we have discussed, and printing is just ancillary for that. So in simple words I have written, you can elaborate in the exam to the extent how much you are comfortable. And here, sir, this is intrastate supply as per 10(1)(a), goods are delivered to Maharashtra, place of supply is Maharashtra, where movement terminates, all that. So regarding intrastate, interstate also you give your reasoning so that it will be done. Next, sir, how much it is? 8,72,000 is the amount. In amount column I have mentioned, IGST column nil, and in CGST 52,320, 52,320. Please understand, below that itself, please make sure the calculation is also shown in the table itself. 8,72,000 into 9% each. You know, sir, supply of goods means how much percentage? Here I have listed out. Supply of goods means 12%. No, yes, 6% each I have calculated. 1 second, let me just check. 52,320 to 6%. 872 to 6%. 52,320. Yes, I have calculated 6%, but I have written here 9%. So it is 6% only. 6% each. Okay, because it is goods. I repeat, if it is goods, here we have written, that is why I have written here properly to have that clarity on tax rates, all that. Okay, now remaining things I will just fill it randomly, like roughly, not detailed way, so that let us not waste time. Now third one, what is the third one? Sir, supplied raw cotton to Dhruv Tara traders. For this we have understood already, made an understanding. Intrastate sale of goods, so supply of goods, forward charge 5 lakhs. So this is CGST plus SGST, correct? So here what I will do, I'll just write here, sir, supply to Dhruv Tara cotton. So all that you write, and below that you write down the reasons. Sir, this is supply not made by the agriculturist, hence no reverse charge mechanism, and this is taxable. So what is the amount? 5 lakhs. So IGST nil, if you remember, because this is intrastate supply. Next, what is the rate? Cotton, they said 5%, that is 2.5, 2.5. So 5 lakhs into 2.5, 10,000. Just confirm. 5 lakh into 2.5% each. Guys, I'm just writing here in such a fast way, don't misunderstand my handwriting. Just to save some time for you, I just want to complete the video as early as possible so that your time will be saved. So 12,500, sorry, so 12,500. I think I should buy a calculator for me for recording purpose in the studio. Right, 12,500, 12,500. Next, third one is over. Fourth one is maintenance for greater Mumbai municipal area, all that. So this is also 1,20,000. 1,20,000 into 18% supply of service. This is okay. See, there can be mixed composition of like what, both goods and services, but predominantly this is service. So this should be treated fully as supply of maintenance services. So what I will do, sir, I will write supply of maintenance services to Greater Mumbai municipality, something like that. Okay, what is the amount? 1,20,000. So this is also intrastate only, so IGST nil, and 1,20,000 into 9% is 10,800. 10,800. So here you can write down 1,20,000 into 9% each. I repeat, please ignore my handwriting. Okay. Next, last fifth point, one more point is there. Fifth point, let us see. Fifth point is giving 10 cars on hire to Gujarat state RTC. This is interstate, please remember that. Sir, renting cars to Gujarat State Road Transport Corporation, how much? It is 3 lakhs. 3 lakhs. And you have to make sure this is interstate supply. Okay. So 3 lakhs means supply of services 3 lakh into 18%, 54,000. CGST nil, SGST nil. If you see total now, the total IGST is 54,000. CGST and SGST 52,320 plus 52,320 plus 12,500 plus 10,800. That will give you 75,620. Okay, so this is the gross GST payable. So we have decoded full sales information. We are done with our step 1. Now let us move on to step 2. What is step 2? Step 2 is calculation of ITC available. Now here same format again, particulars, amount, IGST, CGST. Here please understand one important thing. When RCM purchases are there, because there are RCM purchases also here, whenever RCM purchase is given, please understand, do the problem as if there is no RCM. Finish the problem, routine problem, how you will take ITC, all that. You finish the problem in a routine way and finish the problem. And once the problem is over, once the minimum GST payable, everything is over, then let us add RCM liability so that the question is solved. Okay. So now let us proceed by forgetting there is RCM. As I told you, this first purchase, sir, no GST, correct? So here you should write down the particulars. First particulars, what is that? Sir, purchase of machinery in Gujarat, intrastate supply for the supplier, and he would have charged what? CGST plus Gujarat GST, and write down the reasoning. So as the supplier is, as the recipient, that is Purva Impexa, Purva Impex. Please understand, I am doing it so fast just to make sure your time is saved. So you write neatly, properly, accordingly. As the recipient, Purva Impex Limited is registered in Maharashtra, not eligible for availing ITC. So amount is how much? Amount 5 lakhs. Amount is 5 lakhs. IGST, CGST, SGST nil. So that is how you are done with first entry. Next, like that, 3 more entries are there. So one is purchase of metal scrap intrastate, and you know RCM, correct? So there you should write down the reasoning. Simple. Come here, and scrap purchased from Deshmukh or something traders, unregistered fellow, hence taxable under RCM, but eligible for ITC. So that is how you should mention. So what is the amount? And this is intra supply of goods 2 lakhs, and for scrap, you know, 18%, 2 lakh into 9%, 9%. So here the amount is 2 lakh, and 2 lakh into 9% each, 9,000, 18,000, 18,000. Okay, fine. Next, third one. Third one is procured information technologies, import of services. As we know, RCM 1,50,000. Reasoning you will write 18%. How much is the value? 1,50,000. Okay, next, import of services. Guys, I repeat, write down the reasoning, particulars, everything properly, and come to amount column. 1,50,000. IGST 1,50,000. 1,50,000 into 18%. What is 1,50,000 into 18%? 27,000. Okay, right. Next, fourth one. So 3 purchases are done. We are left with last purchase. A machinery to be used. So we have understood this is not at all a supply, correct? If you remember. So write down there properly the reasoning, everything like this. So machinery sent to USA and repair services are provided there under section 13 subsection 3. Place of supply is USA. Supplier is also there in USA. Hence no GST and no ITC thereof, therefore. Okay. So what is the amount value here? Write down the amount column. In the amount column, write down the amount and show GST implication is 0. Okay. So here it is 5 lakh nil nil. So if you see total ITC now, sir, what is the total ITC? The total ITC is 27,000, 18,000 and 18,000. We forgot one more purchase in additional information. So what is that in additional information? If you remember, sir, this corporate guarantee, correct? Yes, 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 yes. We forgot that. So no problem, no problem. We did not recollect that after the problem is over. So fifth one, sir, this is again, this is also import of services, corporate guarantee. Then you should write down there value of supply is equals to 1% of guarantee given or actual consideration, whichever is higher. So that is 1,50,000, sorry, 1.5 crores into 1% or 0, whichever is higher. Which is higher? 1% of 1 crore 50 lakhs, that is 1,50,000. So here we will write 1,50,000 is the value, and on that 1,50,000 into 18% will be IGST, correct? So what is 1 lakh? Just now we have made a calculation again, 27,000, and this is nil nil. Guys, hope you are clear. So with this we can understand, sir, the total ITC available is 54,000 and 18,000. Okay, with this we are done with second step. So if you understand, it is all about just decoding the information, segregating what are outward supplies, what are inward supplies, and what are taxable, exempt, RCM, FCM, like that. Complete information, if you are decoding properly, you will fill them in first table, first step, calculation of gross GST, second one, ITC, and finally the last step, sir, set off. Sir, if you see the set off, net minimum GST payable in cash. Sir, first one, what I will do, I will take, sir, output tax. What is output tax? IGST, CGST, SGST. What is output tax? 54,000, 75,620, 75,620. So now you should set off, correct? So minus set off ITC. So you know, first agenda is to make IGST ITC balance 0. What is IGST ITC balance? 54,000. How much is payable here? Payable also 54,000. Super. Payable also 54,000. Super. So that means here, sir, IGST ITC balance became 0. No need to worry, our first target is over. And next you can use CGST for SCGST, SGST for SGST. Sir, set off will be mostly easy only for you, because they will twist you the question only in outward supplies and inward supplies. So CGST you can use 18,000 here and 18,000 here. But I repeat, you should be careful with following this utilization rules of ITC balance. Okay, so here it is simple, we are using that. And finally, what is the payable? The net GST payable. If you see, ITC balances became 0. Sir, this is 0, and 75,620 minus 18,000. You tell me what it is. 75,620 minus 18,000. So it is 57,620, 57,620, sir. Simple. 57,620, 57,620. Okay. And for this, what we have to do now, sir, as I already told you, do the problem as if there is no RCM liability, and we did the problem like that. And finally, whatever RCM liability is there to be paid in cash, correct? So what we will do now, sir, after the answer is over, plus RCM liability you should pay, because this should be paid in cash only. Okay, RCM purchases we have taken ITC, and now we are adding that to the liability. We are showing that we have to pay this in cash. How much is RCM liability? Both these things are under RCM, I guess. Import of service is one, and next one is RCM. Here we have seen scrap. Okay, so let me check one more time in the question. So RCM, this one scrap is RCM, and here again import of service RCM. So both the purchases on which we have taken ITC, both are under RCM only. So here 27,000 IGST, 18,000, 18,000, 27,000 IGST RCM, 18,000, 18,000 CGST, SGST RCM. So if you see, RCM liability is nothing but 27,000 IGST, 18,000 is CGST and SGST. So now the answer, final answer, net minimum GST payable in cash. Net minimum GST payable in cash. If you see, sir, 27,000. Again, same answer, 75,620, 75,620. This is the final answer. Okay. So this is how we should solve the question. Let us cross check the answer also for just our satisfaction. That's all. So net GST payable, total net GST payable in cash, 54. 1 second, guys. Again, we forgot corporate guarantee. Sorry, again we forgot corporate guarantee. Yes. So this one we have added, but we forgot about this corporate guarantee. We forgot. Hope you have understood, sir. We forgot the corporate guarantee. So there is 27,000 plus 27,000. So here 127,000 IGST. Here again, I repeat, we forgot corporate guarantee. I forgot, not we. You might be knowing. So I am in a tension to complete this video in quick time. So doing these mistakes. Okay. Hope you have understood. So here it is 54,000. So 54,000. Because all the purchases on which we have taken ITC, please understand, this and this are same. I repeat that both figures are same just because we have taken all the purchases under RCM. If there are any other purchases which are under FCM, these numbers would have changed. So don't misunderstand, don't get confused. Here the answer is absolutely this one and this one are same just because we have all purchases under RCM. So it doesn't create or it doesn't show any difference in calculations or numbers to you. Hope you have understood how to go with question 1 in the main exam, the 14-mark question. It is all about decoding the information available, right? So hope you have enjoyed this video. Please do share this video with your friends who are writing this CA Final IDT exam, and anything else you are expecting from me, please let me know in the comment box. Definitely I'll try to make a video on that. So please make sure you are enjoying your preparation. That is what very important thing. Wishing you all the very best from my end. See you all in another video. This is your Mr. GST signing off. Jai Hind. So next one, if you see the 14th question, this is regarding, see, an appeal is filed with the High Court by Pratik Limited on the question whether activity undertaken by Pratik Limited amounts to supply or not. Actually, whether the activity itself is supply or not. The appeal was decided in favor of Pratik Limited. The amount of tax, interest, penalty involved were IGST 1.2 crores, interest 60 lakhs and penalty 50 lakhs. Okay. Department, however, doesn't agree with the order. Obviously, department will not agree with the order because it is in favor of taxpayer, passed by the High Court, and it wants to take this to, so the said activity amounts to supply. They are contending that this is supply. The department wants to file an appeal before Supreme Court relating to the dispute pertaining to the demand of tax, interest and penalty. You are required to examine whether the appeal can be filed by the department in the given case. Will your answer change in case the matter is related to valuation instead of determining whether that is supply or not? So if you remember, sir, when we are going for an appeal, sir, department, when it can challenge the order, sir, it can go and challenge the order with the GST appellate tribunal or High Court or Supreme Court. If you remember, sir, appellate authority order, they can go and challenge in the tribunal if the amount involves is greater than 20 lakhs. It can go and challenge appellate tribunal order in High Court if the amount exceeds 1 crore. And if they can go and challenge the order of High Court in Supreme Court if the amount is greater than 2 crores. And when you are calculating these amounts, please understand you should take CGST plus SGST, IGST, UTGST, GST compensation cess, everything put together, but only tax but not interest. If you see here, only tax component is 1.2 crores. So obviously department cannot go and file the appeal against the order passed by High Court in Supreme Court. That is the story. Now, sir, they also asked, will your answer change in case matter is related to valuation of services instead of determining whether the said amount activity amounts to supply? Now please understand, sir, there are certain cases where irrespective of the monetary limits, department can go for further appeal. Like for example, refunds, classification, place of supply, valuation, or any other case where which are recurring in nature, continuous in nature in such cases, or if there are any adverse comments passed against the department or government, all the stuff in such cases, or if anything has been declared as ultra vires, any provision declared ultra vires as per the provisions of the acts, or any rules and regulations declared ultra vires the act actually, so like that in certain cases, sir, they can go on challenge. So here, because it is valuation matter, of course, if it is instead of whether it is supply or not, if it is related to valuation, yes, they can happily go on uh, file an appeal so in the Supreme Court, even though it is not exceeding 2 crores. Hope you are clear with that. Okay, so that answer you can just check. Okay, let us just go through the answer. So you just read the answer. When you're going through the answer, please understand, go through the answer carefully, ra? So as we have already discussed, 20 lakh, 1 crore, 2 crores, all the stuff. Next, the aggregate amount of tax, that is including CGS, all that stuff will be considered, and only shall be considered while paying the monetary limit for filing the appeal. So only tax amount will be considered, not interest and penalty. As I told, sir, uh, the monetary limits are not applicable in the following cases. As I told, any provisions declared ultra vires the Constitution, any rules and regulation ultra vires the Parent Act, any order or notification or instruction which are ultra vires the Act again. Next, the valuation, classification, refunds, place of supply, any other issue which is recurring in nature, as I already told you. So here, because the question is regarding valuation, they can happily proceed with the appeal. And any other cases where there are some adverse comments against the department or government, any other case where the opinion, the CBIC, the board has to feel in the interest of justice and revenue, we should proceed, we should contest. Okay, in such cases they can do that. So because the matter is regarding valuation, appeal can be filed by the department to its Supreme Court. Okay, so that is what the point. So with this we are done with question number 14. Let us move on to question number 15. So totally just 20 questions are there. Let us finish off them. So if you see here, 15th question, Smith Inc., a company located in USA, charges subscription fees from its unregistered customers in India. Unregistered customers in India. Charges subscription fees from its unregistered customers in India at its online money gaming portal. Okay, so they are providing online money gaming portal, online money gaming services. Online money gaming is goods. Okay, so online money gaming to customers. Okay, the department contends that GST should be charged on subscription fees which Smith Incorporation receives from Indian customers. Obvious. Smith Incorporation opposes the above view, stating that since online money gaming are intangible goods, do not cross the customs frontiers physically. In this case, GST is not leviable thereon. Considering the above facts, you are required to answer the following questions. What is the place of supply and whether GST is leviable on subscription fees? If yes, who is required to pay GST? Now, first of all, if you remember, sir, specified actionable claims. Sir, we have lottery, betting, gambling, uh, casinos, online money gaming, and horse racing. Sir, these are specified actionable claims. That means these are treated as supply of goods first of all. Sir, with respect to supply of goods, if you see import and export, what is the place of supply? If it is importation, sir, here it is importation of goods because that fellow is providing online money gaming service goods from outside India to a person in India, right? So this is importation of goods. So the place of supply will be obviously India. Okay, so yes, this is place of supply India. Okay, fine. Now next one, sir, whether GST is leviable on subscription fees. First of all, understand, sir, generally when goods are imported, basic customs duty plus IGST, GST will be charged as per customs law. But sir, in certain notified cases, GST on imported goods also will be levied under GST law. So only IGST will be levied, basic customs duty will not be levied. So this online money gaming is one such scenario where, sir, GST shall be levied as per GST law, not as per customs law. Okay, hence GST will be charged. That is one clarity which, if you remember, we have discussed, like you would have studied. Now, sir, the point is, When these people who are from outside India providing online money gaming services to unregistered people in India, that supplier who is there abroad should take registration in India mandatorily and should pay GST on this. Okay, because we cannot ask the importers to pay GST under RCM here. So the point is, sir, supplier of online money gaming there from outside India, that fellow has to take registration. Here, if he doesn't have physical presence, any person representing that fellow for any purpose will be liable to pay GST. And if he doesn't have physical presence, or if this company is not having any person representing them in India for any purpose, then they have the duty to appoint a person for representing them in India and paying taxes. Okay, so that is what the concept all about. Okay, again, sir, the question based on recent changes, all the stuff. One good question, fine. You can just cross check the answer later on. I'm not showing it here. Let us not waste time. Let us move on to the next question, question number 16. So the 16th question, sir, what is 16th question now? Mr. Divas, a registered person in Agra, Uttar Pradesh, purchased a car for 12,50,000 on 15th October. On 31st October, the car met with an accident resulting in a minor damage. Okay. Due to urgency, he got his car repaired in the local garage nearby the market instead of garage authorized by his insurance company, Suraksha Insurance Company. Okay, super fine. Total cost for repairs is 54,000 plus GST. On the instructions of Mr. Divas, invoice of the entire amount was raised by the garage in the name of Suraksha Insurance Company only. The insurance company approved only claim of 40,000 plus GST. Super. After the survey, all the stuff, and reimbursed that amount. So, with respect to above facts, considering above facts, you are required to answer the following questions. Okay. Whether Suraksha Insurance Company is eligible to avail ITC on the basis of the invoice raised by garage? If yes, what would be the amount of eligible ITC? Sir, you know the question is based on purely the recent circular, what is there even in your amendments also. See, the answer is simple. Sir, 54,000 this fellow has spent and 40,000 only this company has approved and is paying. So what is the burden? See, generally, when you take insurance services, it is blocked under 17 subsection 5. But there is an exception for general insurance companies. If they take repairs and maintenance for the vehicles, yes, they can take ITC. So this is an exception to 17 subsection 5 blocked credit. First, you should understand that. So here for general insurance company, yes, we will give ITC, but only to the extent of money, whatever they have approved and paying it to the customer. So they have paid 40,000 only to the customer plus GST. On that GST is 18%. So that is 7,200. That much ITC the company can claim. Okay. Now, late night recording side effects. Now, sir, what would be your answer, or will it differ if the garage has issued two different invoices for 40,000 as well as 14,000 separately, sir? Then obviously for 40,000 only Suraksha Insurance Company has got the invoice. So obviously they are eligible for ITC only on that particular amount. So for only 40,000, again 7,200 they can claim ITC, not on balance amount. Okay, simple. Next, in case the garage is issuing the invoice in the name of Mr. Divas, would Suraksha Insurance Company be eligible to avail ITC? Sir, when the invoice is in the name of Divas, purely in the circular, we have already seen that. Sir, Suraksha Insurance Company doesn't receive any invoice with them. They cannot hold any invoice based on which they can take ITC. Nothing will get reflected in Suraksha Insurance Company GSTR 2B. Correct. Suraksha Insurance Company doesn't have anything in their name as invoice, all that stuff. So they cannot take ITC here. So here, what will be the ITC? 000. Okay, 0 will be the ITC. Okay, that is what the concept. So question number 16 is done. Next, question number 17, one straight theory question. What are the scenarios where goods and conveyances are liable for confiscation under section 130? I'll just show you the theory part, the points here. So when the goods and conveyances are liable for confiscation under section 130, so if you see question number 17, as I was telling you, question number 16, 7,200 ITC. Second one also ITC 7,200. Third one, invoice not in the name of insurance company. Thus, in the given case, invoice has been raised in the Divas. So, Suraksha Insurance Company not eligible to avail any ITC, as we have discussed. Coming to question number 17. Sir, what are the cases where goods and conveyances are liable for confiscation under section 130? Sir, when any person is supplying or receiving goods in contravention of any provisions of this law with intent to evade the tax. does not account any goods on which he is liable to pay tax, supplies any goods liable to tax under GST law without having applied for registration, contravenes any provisions of GST law or rules made thereunder with intent to evade payment of tax, or use any conveyance as means of transport for carriage of goods in contraventions of provisions of GST law or rules made thereunder, unless the owner proves that it was without his knowledge or conveyance of the owner himself or his agent, all that. Okay. Then all such goods and conveyances shall be liable to confiscation and the person shall be liable to pay penalty under section 122. So that is what the concept, right? So with this we are done with question number 17. So remaining 18, 19, 20 small customs questions you can just manage, but please make sure you are going through that. I just don't want to increase the length of this video. Let us close this here with GST discussion. So hope you have enjoyed this RTP discussion. Please do share this with your friends who are watching or who are attempting this, who are attempting this upcoming exams. So as I tell in every video, please make sure enjoy your preparation. That is very important. Wishing you all the very best from my end. See you all in another video. This is your Mr. GST signing off. Jai Hind.